Right now, somewhere in your city, there's a bank building with thick walls, cameras, and a giant vault. Inside is money, your time, your effort, and your plans for the future. And like most people, you probably believe the bank is simply keeping it safe. But what if I told you that the moment you deposit your money, it stops being yours in the way you think? In the next few minutes, we're going to uncover a simple but uncomfortable truth. Banks don't just store your money. They depend on it to survive. Let's start with what actually happens when you deposit money. When you put $1,000 into your bank account, the bank doesn't lock it away. Under a system known as fractional reserve banking, most of that money can be lent out to others. Mortgages, loans, credit cards. In other words, your deposit becomes fuel for the bank's entire business model. They earn profits by lending, while you earn little, often losing purchasing power to inflation. And here's the key insight. The stability of the banking system relies heavily on one thing: your confidence that you won't need all your money at once. Because if everyone asked for their deposits simultaneously, banks simply wouldn't have enough cash on hand. That's not a conspiracy. It's how the system is designed. Now, step back and ask a deeper question. Is there another way to think about money? One where deposits aren't quietly transformed into debt? In Islamic economic thought, there's a concept called amana, trust. A deposit is not merely a funding source for the institution. It carries a moral responsibility. Classical models like Wadiya treat deposits as safekeeping, while Mudaraba structures investments as partnerships, where profit comes with shared risk, not guaranteed interest. This introduces a powerful principle often missing in modern finance: risk sharing. Instead of one side transferring risk to the other, both sides participate in outcomes. It aligns incentives, because success is mutual. Today, this idea isn't just theoretical. Globally, Islamic financial institutions manage trillions in assets, many tied to real economic activity, trade, infrastructure, and tangible investments. And increasingly, people, Muslim and non-Muslim alike, are exploring these frameworks as they search for more resilient ways to manage wealth. So the real takeaway isn't that banks are evil. It's that understanding how they work changes your relationship with money. You move from passive customer to informed participant. Because ultimately, financial systems run on trust. And once you understand where your money actually goes, you can start making decisions that align not only with your financial goals, but with your values. If you're trying to make sense of money in a complex world, not just what to do, but how to think, consider subscribing. This channel is about building clarity, one idea at a time,